What's good, everyone? Welcome back to another video. Thanks for tuning into Stock Essentials. Today we're going to be going over my favorite option strategy, the cash secured puts, and why you should do it on AMC. As we can see here, I'm selling a $40 put on AMC, which does expire today. And I opened it for around just under $300 of credit. And as we can see here, it's bled all the way to $17. Because remember, we're selling these contracts, so we want the premium to go down, to bleed out. And then that's where we're going to be making most of our profit. Because as option sellers, we're on the other side of the contracts. So we want this value to go down as much as possible so we can so it either expires worthless or we can buy it back for a profit. As we can see here, if I close it out right now, we will have a total return of $274. So I'll probably just let this expire. And if it doesn't, if AMC ends up tanking below the $40 mark, I would be fine holding 100 shares of this. Because remember, AMC has not short squeezed yet. So I'm going to go over some recommended options that you guys could play for next week. So you will need maybe a few $1,000s of collateral in order to play this strategy, but it's a pretty consistent and safe strategy to play on this stock. So I would recommend the June 25 expiration date. And as we can see with the options premiums, they're pretty high because implied volatility on the stock AMC is pretty high. A lot of people are anticipating a big move for the stock, so the implied volatility as well as the premiums are going to be a bit higher. So you could sell something if you were planning on buying 100 shares of AMC. Another strategy you could do is sell a $40 put, and you will collect almost $700 of premium, which is pretty nice. This is going to make your cost basis $33 a share because of the premium you're collecting. If AMC goes under $40 by June 25, you will have to buy 100 shares at $40 each. But because we're receiving a credit of $700, it's lowering our cost basis of each share by $7. So it's pretty much like we're buying 100 shares at $33 each. But of course, we want AMC to hover just above for the $40 mark. That's where we will realize our total credit, our total profit of $700 in just 2 weeks. So in order to open up this cash secured put, you will need $3,300 of collateral because it does require $4,000 of collateral. It's the strike price times 100 and then subtracting the premium you're receiving. So it's going to be a little less collateral than $4,000. You will need just above $3,000 of collateral. So this is going to be my favorite option strategy, favorite way to play AMC. Buying calls, buying puts is pretty risky, but selling options is going to be the best strategy because implied volatility is still pretty high, meaning the premiums we receive is going to be higher as well. So this would be a pretty good cash secured put to sell the $40 June 25 expiration date. And if you want to be a bit safer, you can go further down. You're still going to receive a lot of premium for these far out the money puts. So something like a 33, you can even go down to a $30 strike and receive $218 of premium. That's pretty good. If you think AMC is going to remain flat and stay above $30 by 2 weeks, this would be a very good contract to sell as well. The $30 strike, because $200 premium in 2 weeks, that sounds like a pretty good amount of profit as long as AMC stays above that price point. So if you have a bigger account, you have $12,000, you could sell 4 of these contracts and receive over $800 of premium in just 2 weeks. And if you do that every 2 weeks, you could receive over $1,600 of premium every single month, because every 2 weeks you're able to sell these contracts. And just with an initial investment of $12,000, you can make over 10% a month, which would be over $1,600 a month. And if you do that, if you keep doing that, eventually your initial investment will keep compounding. You'll be able to sell more puts and grow your money and wealth in that fashion. That's my strategy. That's my favorite strategy that I like doing, and I've grown my account to pretty high numbers using this strategy. Not really gambling. It's pretty safe, and all those consistent gains really adds up. But of course, the downside is you're risking a lot of the potential profit, because if AMC goes to $1 million, you're still only going to receive the premium as profit. And a lot of people aren't willing to do that. They rather have unlimited profit potential. But for me, I like to play it a little bit safer. I like to have the consistent wins, the consistent gains, consistent profit. And over time it'll compound and you will see the results later on. But that's about it for this video. These are the contracts that you should be selling with the strategy. If it helped you in any way, please leave a like, comment down below what type of videos you want to see, and of course please subscribe if you're new here to the channel. It helps out a lot. Thanks for watching.